Hello guys and welcome to Hakman Traders. In this video I'm going to be showing to you what is stochastics. Now stochastics also is an indicator used in the stock market to help analyze the overbought and oversold signals. Now this is a great tool, so I will have to explain this in the video. Now to better explain the stochastics, let me show it to you. Go to your indicators to plot your stochastics, scroll down and here it is, stochastics. So click on it and stochastics will appear at these levels. To better understand stochastics, now you will it it helps you identify overbought and oversold signals. Now this 20 level is an oversold signal and 80 level is overbought level. So it is the same as the RSI but a slight different. You can see there are two lines in the stochastics. One is the blue line and one is the red line. So overall these are the same, but these there are, there's a few difference. The blue line, whenever the blue line is a faster line and the red line is a bit slower line. So whenever the in a trend change or in a price change, whenever this blue line crosses over the red line, it means that this is an uptrend, and whenever the red line crosses over the blue line, it means that it is a downtrend. Now in this case, if you can see clearly that the blue line crosses over the red line, so the trend changed to an uptrend and moved upward. But at these levels you will also have to keep an eye out on the bulls and the bears, what are they doing in the market. So in this case, as I've explained the psychology of the candlesticks, the candlesticks was a bullish candlesticks up to this high, so the bears got into it and pushed the market a bit downward on that day. So on the other day, on this particular day, the bulls won, but the bears were active. So in that case, the market dropped down. So in this case, you will have to keep an eye out um, on the bulls and the bears, how they are reacting to the market. Now overall the now it was a great position to sell your short your position at these levels, because it is the highest high, and as you can see, it also identifies a clear entry for the short position. Now as you've recognized this area, that it is an overbought area, and also the bulls are also the bears are also active at this level, so it is a great point to short your position at this level and trade and come along with it down. So it doesn't matter wherever you close, but close it when close it for a profit. That how much matters. You can also use the same method of support and resistance level as I've showed to you in the RSI. Now this is the resistance level and this is the support level, so you can also use this technique in this as well, but it may not vary too much, it may not apply too much in the stochastics. So that's the drawback of this, using the support and resistance level in stochastics. Now if we take a much closer look, take a look forward, again the same thing happened. The blue line crosses over the red line, so sorry about this, the blue line crosses over the sorry, the bears were active at this level, so the blue line the blue line no sorry the red line crosses over the blue line, so the trend became a downtrend. And and in this case again the blue line crosses over the red line, so it became a downtrend. Now overall it is all about the crossing over of these lines. Whenever the blue line crosses over the red line, it means that the trend is an uptrend, and the red line crosses over the blue line, it means that it is a downtrend. So once you've recognized these area, whenever this blue there's a now I will explain to you when to enter and when to exit a certain position. Now as you can see that this was a downtrend, and this was an overbought area, sorry, oversold area. You can see that as the blue, let me mark that out, as you can see that the blue line cross over the red line, it means that this is a great entry point. but as you can see that it again oscillates and again crosses over the blue line at this point and became an uptrend. So it is a great point to enter because it is at its lowest level, but this swing does not matter that much. This swing does not matter that much, and again it moved upward, became an uptrend. Now again the same thing overhead, the blue line crossed over the red line and it became an uptrend. So it is a great, this point is a great entry point. So basically what I'm trying to say here is that whenever the blue line crosses over the red line, it means that this is a great entry point. Sometimes this happen in a downtrend, as in this case. No, sorry, sometimes this happen a bit like this type of thing happen, but that's you'll have to be aware of it, because you'll have to know what is you'll have to identify the trend. What is the trend? It's an uptrend, a downtrend, or a side trend. Usually in a side trend it also traded like this. It shows you the same as the as an uptrend or a downtrend. So you will have to keep an eye on the blue line usually shows the prices change. As you can see at this level, the red line was constant, the blue line shows the price change at these levels. So, and again at this level the blue line did this, and where is it? Yes, now at this level sorry about that. As you can see that the red line crossed over the blue line, so it became a downtrend and start trading in a downward direction, and again in this level, at this case. So it is a great entry point. It's a great, sorry, it is a great position to short your position at this level. Great place to short your position at this level and close that short position. Now at this level it is a great entry point. So you can move along the trend and close your position at this level. So this is again the same over here, great entry point and great exit point. And now it is trading in a side trend. It may show like this from far below because the price have reached too far above, but if you take a closer look at this level, we can see that there are ups and downs in this trend. Overall there are ups and downs in this trend. So do apply this in your trading and see what results it gives you. Now I'm going to show you another chart as well. This also the same chart. As you can see, a major, this was what you call a breakaway. So it was a great strong breakaway. The prices break down below, so it's a clear signal that this is a short position, but you cannot short your position at this level because it already broke away. So do not do that to give you that it will go further down. Now in this case, if you take a close look at this candlestick, it came down, pushed down up till this point and then moved upward, showing signs of bullishness. It's not a bullish candle, but showing signs of showing that the bulls are active at this level. So wait for it to show you, to give you a confirmation that this is a bullish candlesticks, and the trend will change to a bullish pattern. So in this case, if you consider this, now again it shows a clear bullish candlesticks and the blue line crossed over the red line. So after that the trend changed to an uptrend and moved upward. Now these levels, as the red line crosses over the blue line, these are great position to these are great exit points to exit that trend and lock in your profits. The rest is the same, there is no much thing about it. I've explained that to you in the previous chart, so there isn't that much about stochastic. That's all about stochastics, and that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.